Hello and welcome to Wake Up and Smell the Mic S&P 500 review for Monday, February 27th, 2023. It's now the 25th. We start off in the S&P 500 daily chart in DeMark looking back to end of October 2021. I'll zoom into the current area now. The S&P 500 daily chart has printed the combo and sequential buy setup 6 count. And to negate that for end of day, Monday the 27th, there must be a close above 3997.34 for the price flip to the sell setup count 1. The qualified demand line was qualified on Friday, so all 3 of these are qualified, and these 2 here are qualified and confirmed. The momentum down for 50% was qualified on Friday's bar. So for Monday, there must be an open below this close, tick lower than this low, and close below this close on the 24th. So everything is measured on the bar for the 24th. And if that happens, that will be qualified and confirmed. Price turns around and heads north and closes above the relative retracement up 1 for end of day on Monday, and that level becomes qualified. And of course, the qualified momentum down will go back to being disqualified. And price is well below the Ichimoku baseline, and the conversion line is edging ever closer to the baseline. So a cross under of the conversion line under the baseline will be more ominous sell signals. And price did dip its toes below the TDST line, so that should be good support still moving forward. The only good thing that happened on Friday is that price did not close below the sell TDST line. Meanwhile, the D wave, down wave 1 and D wave, up wave A continue traveling south. Started here and has been moving down with every new low. And for the next 4 trading days, the D wave, down wave 2 and D wave, up wave B will print when price ticks higher than this high on the 14th. After that, it's the high of this bar, then this bar after that, etc., etc. And within the next 4 days, I would say that the most important economic reports coming up would be the ISM manufacturing on March 1st, and that's at 47.4. So if that goes back into expansion mode above 50, that would be very bad. If it continues going south, then that would be very good. And ISM services on Friday would need to get back under expansion mode under 50, and that would be very good. Any continued expansion would be very bad. The NYA top caller chart, starting off with the NYA to SPX ratio, basically value versus growth, showing this past week a sideways action, an indication of everything doing poorly. But it looks like the ratio wants to get back above the top of this ascending triangle that value broke out of back here, and maybe value can break out again, and we'll have the rotation again from growth back into value. The New York AD line is headed back towards the top of its descending broadening wedge pattern, It has the EMA 50 to go through first. That's in green here. Then the line, and then the 200 simple moving average in red. The New York ratio adjusted McClellan breadth oscillator is getting down into some of these lower valley areas here. Not quite to the ultra extreme ones, these last two, but that's quite deep as it is. NYA price shows the candle for Friday just about nailing this falling peaks trend line here that is from the top of the big W patterns. It had a nice bounce back up end of day Friday, you can see in the thumbnail here. And if it really does pan out that the Fed raises their target rate up into the 6% area, then for sure we're going to revisit this big fat juicy gap zone bottom here, somewhere inside of it eventually. Below that, I still don't think that's really in the cards, as we're closer to getting out of this debacle than we are getting into it. So I wouldn't exactly say the light is at the end of the tunnel, but we're definitely past the halfway mark. And the ratio adjusted McClellan volume oscillator for the NYA is plumbing some of these lower valleys here that are quite extreme. Could get worse, but let's see it not go under this blue line here. Bounce off of it like over here would be nice. It tested it just about once and wants to head back down that way again. And I would say that it is inevitable that the ratio adjusted summation index of the ratio adjusted McClellan breadth oscillator goes back under 500. I do not foresee any bounce off of that and heading up, at least in the immediate future. It could hold the line a little bit, and that would be a good sign. Maybe go under a little bit, something like this over here, and then head back up a little bit. As long as it stays around there, that's a good sign. Same thing with the ratio adjusted McClellan summation index of the ratio adjusted McClellan volume oscillator. And it has already made it under 500. It's at 423. And RSI 14 is still within the mean reversion bounce area possibility. 40 and above, under 50, anywhere in that 50 to 40 range, come down and bounce back up. But if it heads down below 40 towards 30, then it's going to be a lot harder, but not impossible, like back over here. And the on-balance volume for the NYA made it back under this downtrend line here in dashed red. So then there's this other one, falling peaks trend line here. And the NY stocks only AD line, and its McClellan breadth oscillator ratio adjusted still lives in this horrible bearish divergence, and it looks like the music stopped. So moving forward, we'll be on the lookout for a bullish divergence. Maybe get this headed up like this and have price still heading down like this. It's already started a little bit, but let's see what develops. And the NYA intermediate term volume oscillator is down below zero. Things will look bleak if it gets below this valley here. The intermediate term breadth oscillator for the NYA is still above zero, but fast approaching it. And the instruments above their 200 period simple moving average in the NYA has bounced off of 60, headed up, and looks like it's testing it again. That sure would be a good sign for it to stay above 60 and just stay in this range a little bit and go sideways would be about the best case scenario. The NDXT NASDAQ 100 equal weighted fat cap megatech index still shows the big M is executed and probably going to head down for a test of the breakout area around 6,200. It's holding its own right now. However, the poster child for the index of equal weighted fat cap megatechs, Microsoft, it has its own bottoming diamond pattern that it has broken out of, and it actually went up to the 100% target, which gets hit about 73% of the time, and it's promptly falling off the face of the earth and has already surpassed its breakout area throwback. So it's underneath that, somewhere in between this 218.80 and 230.32 would be a good buying area, preferably as close as you can get to 2019 or so. We're going to focus on the high-low KSTs for the NDX, NASDAQ Composite, and NYSE. We already know what happened to the high lows themselves. See the previous videos that mention those. And the KSTs we're going to focus on is the intermediate term, which has rolled over, and now the long term is giving indications of rolling over. So it was neutralizing the downdraft with this one headed up and this one headed down, but if this rolls over along with everything else, there will be continued big trouble. Same thing with the NASDAQ Composite. It has already rolled over, meaning the long term is joining the intermediate term and the short term KSTs. And the NYSE high-low KSTs, long-term KST is starting to roll over too, so it's not neutralizing the downdraft anymore. Besides, I mentioned before that both of these in the NASDAQ Composite and in New York were way up in the nosebleed area. For sure the NDX and the New York. We'll try to run through the monthly charts as quick as we can with special focus on the w-COPPOCK curve. Here's the NASDAQ 100. It still hasn't reached its uptrend line here. The AD line is right about in the middle of its falling wedge or channel there. And the w-COPPOCK curve, after having glimmers of hope of turning around, has headed back down again. And the NYA monthly, you can see price up there, shows the KST is continuing to creep downwards towards zero, and the w-COPPOCK curve is flattening out, not quite headed down yet, but definitely flattening, and the PPO is flattening right at zero, right before zero, after hooking around and heading up. And one would be hard pressed to find an example of where the PPO failed at zero and turned around and rolled over again. You could see the other ones here. Once it gets to zero, it usually heads up and moves up a bit. You can see that in 2020 here, it flattened out a little bit and then eventually headed up. And the S&P 500 small cap monthly shows that it did break out of its descending broadening wedge at the beginning of 2023, maybe in December, and its w-COPPOCK curve has hooked around and still has indications of staying hooked around and maybe heading up. And the S&P 500 monthly shows the 12-month simple moving average still below the 24-month. And the AD line nailed the top over here and headed down. It's getting towards the middle line here in blue. However, its COPPOCK curve never even had any indication of hooking around and heading up. So it is continuing its downward trek now. And here's the value line geometric monthly chart. In blue here is the value line, and you can see its COPPOCK curve nailed this downtrend line of falling valleys here and hooked around and is headed up. And its AD line is holding its own. A lot of up and down in there, but it has not broken below this red line here or busted out above this blue line here. The US dollar daily chart, and one of the hardest things a trader can do is reverse his thinking, where they thought an instrument would do one thing and it does another. And in this case, I had mentioned I wasn't really interested in the dollar. I was more focused on gold, and that could have possibly reversed recently as the daily went above 105 and closed at 105.16. So I'll have to reverse that thinking, especially if it continues moving up for Monday morning, and then use the 105 line here as a stop, or watch it as it goes under to see if it goes back down towards 103, and call that another failure of reverse thought. But it looks like the dollar is going to head up. If I was reading wrong, I noticed that the numbers were getting smaller and it was reversing, but I have forgot to realize that we're under zero, still in the negative section. So as the numbers get smaller, we're getting closer to zero. So the diffusion indicator is moving up quite nicely. And the short-term KST is reversing above zero around 10 and went above its signal line. The intermediate term KST went above zero recently, and it looks like the long-term KST is above its signal line, still well below zero, meaning that there's a long way for the dollar to run to the upside. First, we'll look at the gold correlations, and then we'll go look at the GLD. Right now I'm looking at the correlations in the main gold end of day. This one here, they closed at 1817.10. So the gold to US dollar correlation is well at 100% negatively correlated. So dollar goes up, gold goes down, and vice versa. Same thing with the 10-year, just about 100% negatively correlated. So when the 10-year goes up, gold goes down. And the gold to USO oil is holding its own. It tracks oil pretty good. And the gold to the yen is 100% positively correlated. So if the yen goes down, gold goes down, and vice versa. And the yen is for sure headed down with the dollar skyrocketing. And then there's the gold to the tips. And you can see when these are positively correlated, that's bad news for gold. And here's the GLD ETF that tracks gold. And I gave up on gold. I gave it a chance when it went under the 126 EMA here in black. You can see it in the thumbnail over here. And when it did not close above it for end of day Friday, I jettisoned all gold. So took a small loss here, but that's minuscule for the gains that I booked by selling all the gold we got into down there. There wasn't much left, but it for sure countered that nicely. The CBOE total put call ratio charts KST of the put call ratio has made it above 0, so now we look for which line to aim for up here. There's 3 of them, a low, medium, and ultra high over here. I believe we're out of this 2022 era where they would hit 0, meaning the KST, and head down, never amount to much. So let's see what happens. There's a slim possibility that it rolls over like that again, but this initial surge looks too strong, just straight up like that, so I expect it to head towards these lines up here. The S&P 500 cloud chart for the daily study, and we're going to focus in on the lagging line here, which reflects the close for Friday, 3970.04. So this area here, starting at the top of the cloud, the conversion line and the baseline will be pretty good support for Monday only, it looks like. So the top of the cloud is at 3966.13. The conversion line 3946.34, and the baseline at 3932.73. But then the next day the baseline dips down to 3909, right around the Fortress Fed resistance. So that will probably be good support area too for Tuesday. And the conversion line for the 23rd is at 3958.30. So maybe for a couple days on the conversion line and baseline. The S&P 500 support and resistance levels big board chart shows the gray areas at the daily Bollinger Band, lower band. The top of the cloud, 26 bars back concerning the lagging line and the pivot point. And price for the close of the aftermarket hours on Friday the 24th for the S&P 500 was 39.69. So to the downside, there should be pretty good support still at the 200 simple moving average, 39.40. Right near there is the conversion line, 26 bars back concerning the lagging line. Then the daily channel 3 low is near there. Same thing with the disqualified sell TDST line and S1. And then get past that to the downside, and there's the top of the cloud. Well, actually that's for the 200 moving average, so that's right near there. Get under the top of the cloud, then the baseline 26 bars back concerning the lagging line is at 39.33. The weekly Bollinger Band mid-band 39 period moving average 39.36. Monthly support and resistance line 39.33. The weekly channel 3 low, 39.33, and then support 2 at 39.28.62. So there's a couple of really strong support areas to the downside. The first one starting at the conversion line, 26 bars back concerning the lagging line. And then I would consider the baseline 26 bars back concerning the lagging line, the second one. Break through all that, then there's the downtrend line at 39.22. The 100 simple moving average, 39.14. And then we're getting back to the daily Fortress Fed resistance around the 39.06 area, which is right near the bottom of the cloud. And as a correction, the trend factor down 2 is a gray area there. So to the upside, above the daily Bollinger Band at 39.68, is the weekly conversion line, the relative retrace up 1, the weekly diamond bottom extension perfect uptrend channel, R1 and R2, and the Rock 1 made it under its negative volatility line at -1, so it closed at -1.05 and is pointed down. ATR2 was at 62.73 and pointed up, and the PPO extreme is under 0 at -0.79. And the New York traditional McClellan breadth oscillator to get back to 0 would require 3,548 advancers over decliners to get back to 0 on just about every single instrument in the NYSE. Have a great day.